Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special edition where our focus will be on Kalyan Jewellers. The jewelry retailers' consolidated net profit for Q4 has come in higher by 96.3% at 137.5 odd crore rupees, and we've also seen a 34% increase in the revenue from operations for the company in Q4, which has come in to the tune of 4,534 odd crore rupees as well. Not just that, EBITDA has stood in at 306 odd crore rupees in Q4, registering a growth of 19%. However, we've seen EBITDA margins contract to 6.8% in Q4 as against 7.6% that was seen in the previous year's quarter of Q4 of FY23. To detail for us what has gone well for the company in this quarter and what looks positive going forward from here, now is the top management of the company joining in. Mr. Ramesh Kalyanaraman joins in. He's the Executive Director at Kalyan Jewellers. Welcome, sir. Thank you so much for taking the time out for this discussion. First up, congratulations, good set of numbers coming in on both the top line and the bottom line. Could you detail for us what really went well for you in this quarter, what contributed?
Thank you very much for the opportunity. And yes, as you see, the growth has been excellent. Q4 was an excellent quarter and the full year also was excellent. And the revenue growth was there, the PBT growth was also there. Margin, again, gross margin levels, the margins were very stable on a store level. EBITDA margins, what you see is mainly because we went into franchisee model from the previous financial year, wherein we give a share of margin to the franchisee partner. That is the only reason why the EBITDA margins have degrown. But if you look at the PBT growth, there has been a 0.2% growth. It is 4.6 versus 4.4 if you look at the PBT margins. So that should be the way we look at that for the forward year also, or the running year, because we are expanding in the FOCO model and there will be a degrowth in gross margins as well as EBITDA margins, but PBT percentage should grow. That is how we should see.
Understood, sir. So on the margins front, since you are saying we need to see that there could be subdued trend on both the gross margins as well as the EBITDA margins, what is the likely band that you are looking at for FY25 since there is going to be a continued pressure?
Yeah, so we will not be able to give a forward statement on the EBITDA margin for the running year. But again, the way we should look at it is the PBT margin growth will be more than the revenue growth.
Okay. All right. So I think this time around you have reported anywhere to the tune of 6.8% of an EBITDA margin. Do you see at least a similar band continuing, or do you see a further fall from here?
It will keep on falling because all the additional new showrooms are in the FOCO model, where the gross margin itself, we give a share to the franchisee partner. So it is going to marginally fall from this every year till we open our own stores. But for the next 2 years, our focus is going to be expansion with the satellite franchisee model, because we have other objectives like reduction of debt, take out the non-core assets because of that, and further lighten the balance sheet, etc. So the next 2 years will be a FOCO model expansion, wherein you will see a decline in what you call the gross margin. EBITDA margin degrowth can be partially negated because there is going to be a saving from interest, because we have reduced debts in the previous financial year and we are going to reduce further debts in this financial year as well.
Okay, understood that, sir. So then how would you really look at the outlook for FY25 in terms of the top line and the bottom line? What kind of growth? Can you sustain the kind of growth that you have seen, because it's a substantial jump? Or do you think it is because of the base and therefore there could be some ebbing of the expectations we should do?
No, so again, I will not be able to give a guidance, but what you see on the ground for the first 40 days of this financial year is again strong SSGs. And again, we don't see any major driver that can change the SSG levels which we see on ground. And there is going to be expansion for this financial year. We are going to open 80 Kalyan showrooms and 50 Candere stores. That is going to help our revenue growth. We have opened 57 showrooms in the last financial year. All the stores the revenue, the full revenue for the year, it's also going to come in this year. So the revenue growth is going to be there. It's going to stay. But on a percentage of growth, I will not be able to give a guidance.
Understood. So you're saying 80 Kalyan Jewellers stores you're going to be opening in FY25, is it, sir?
Yeah. And the first 40 days, we have already opened 10 Kalyan stores.
Okay. And 50, which other stores did you talk about?
That is Candere, our lifestyle jewelry division. It was a 100% online division a couple of years before. Now we have started opening physical stores in that line, and we will be opening 50 Candere stores this financial year.
Okay. Any vision of the kind of revenue contribution that you could get from this lifestyle jewelry segment along with your major segments?
So now it's very small because the revenue is only in what 160 crore.
Okay.
Again, the revenue growth, again, the Candere is a new platform. We have only 13 showrooms if you look at till March. This year we are going to open 50 Candere stores, and revenue can come a bit late because we will be investing in campaigns and brand building, etc. Post the physical store openings. So revenue can come after the store expansion. So there can be a delay, and that is why we don't want to give a number on Candere.
So
But
probably from FY26 onwards.
Yeah, so, but we are targeting a 4-digit revenue in the next 3 or 4 years.
4 billion revenue from the Candere stores over the next 3 years, you're saying, sir?
Yeah.
Okay. So also now coming to the main jewelry portion, how was the demand in Q4? Because gold prices soared to an all-time high level as well. There was a record run of about 40 odd days that we saw in the gold prices. And of course, going forward from here, what is the trend likely to be?
For our total revenue growth was there. Again, SSG itself grew by around 17%. And it was strong in South as well as non-South region. As we speak for the first 40 days in this quarter, Q1, we are seeing a double-digit SSGs. That is again coming after a 15% SSG which we had in Q1 last year. So things are very strong on ground, and there is a shift from the unorganized to organized. As a brand also, Kalyan has evolved over the past many years. So we think it's going to stay, and we are very positive on this financial year.
So no dampening impact on the demand side, sir, because of the rise in prices. Did you witness any of that?
So for the first 1 week of April, we saw a pause because the gold price was growing very steeply, and after that, then customer come back. So that's why the first 40 days, I told you that there's an SSG of a double-digit SSG which we saw.
Okay, and how was the demand on Akshaya Tritiya, sir? What was the footfall like?
Akshaya Tritiya was very strong. So the first 40 days, what I mentioned is including Akshaya Tritiya. If we talk only about the Akshaya Tritiya day revenue growth, it will be a bit deceiving according to me because we have added stores. Again, Akshaya Tritiya fell 2 days last year, this year 1 day. So it's not the right way to compare. That is why we gave an update of the first 40 days of Akshaya Tritiya, meaning of Q1.
Okay. And sir, going forward from here, what is the kind of trend you're expecting on the gold prices and therefore the demand trends for the entire fiscal year FY25?
So gold price, nobody will be able to give a guidance on the gold price. But again, when you look at consumer demand, that is no way completely related to gold price. There can be a pause in demand when the gold price goes up, comes down steeply, etc. But again, customer comes back because customer have also seen this gold price cycle over the past many years. And a consumer comes with a budget. So if the gold price is very high, they end up buying a lesser volume. If the gold price is very low, they end up buying a better volume. So that is the way we should look at it. Last year, if you look at, even when the gold price came down by around 3 to 4% H1, we grew by around 17%. Okay. So again, H2 also we grew when the gold price was climbing up. So that is not very related is what I'm trying to say.
Okay. So also wanted to understand a little bit of breakup. Where exactly are you seeing higher demand? Now, is it with higher price ticket items when it comes to jewelry, or is it the lower ticket items, say below 1 lakh rupees, or is it higher up? So if you could give us that sense.
Yeah, so again, if you look at per se, growth is higher in high value products. Okay, when you compare only the growth of demand growth in segment wise, the higher value product has better demand. But what we saw in Akshatriya time, low ticket was also equally, what you call, the demand was equally strong. So it depends on season to season. Again, it depends upon uh, price also, because the demand can move to quarters. The discretionary demand, people can wait even for a month or 2 months if the gold price is high, according to them. But the wedding demand cannot wait for more than 1 week, 10 days, because wedding has to happen. So demand can move quarters according to the gold price. But demand per se, high value products demand is really growing.
Okay, understood, sir. So now, do tell us, sir, also, there is this entire buzz about lab-grown diamonds as a new category that's emerging to interest a lot of jewelry enthusiasts. Have you seen on ground any kind of inquisitiveness from people within this space? How are you assessing the entire demand scenario emerging around this? Would you be looking at tapping this scenario and maybe in future looking at this space as well, since you're already into the lifestyle products already with Candere? Would you also be looking at this space as an emerging trend, and do you already are you already offering some of that?
As we speak, there is actually zero demand at the store level for lab grown diamonds. That might be basically because there is still uncertainty in the price of lab grown diamonds. So, as a brand, also, we don't actually push those kind of products. We don't keep those kind of products because consumer look at Kalyan as a brand when we sell something, right? So, if the price goes down, customer will feel bad about Kalyan rather than the lab grown diamonds. So we are also waiting for the price to get stabilized somewhere. And as we speak, there is no demand at the store level. But as a
Okay.
as a consumer brand, we always, it's according to demand and supply. If the demand comes, we surely supply, right? Because we are a consumer front brand. But the demand is nowhere there.
Okay, but if you've not seen the demand, then there would not have been any reason for you to really think of any revising of prices or additional discounting, if any. Have you done that?
Nothing, because lab grown diamonds again comes for a very small category in the overall space of diamonds. So it comes majorly in solitaire, and that also in a particular range of solitaire, which is very small in our country. Outside India, that so-called segment is big because they use this for the engagement rings there.
Yeah,
So that
yeah.
is why it is actually important outside India. But in India, the range which we talk about on lab grown diamonds is actually very small.
Understood, sir. Also, sir, if you could talk about your international performance, international business performance this quarter, how was it and how is it likely to pan out?
So international is doing good. SSGs are strong, single digit. It's not as great as India because India is going through a shift from unorganized to organized, which Middle East is already an organized segment, organized geography. Otherwise, SSGs are strong. It is in the range of what, 6-7%. And we have tried out our first franchisee model in the Middle East in the last financial year. We
Okay.
have signed up 5 more showrooms, and franchisee, if it gets settled down again, there will be strong expansion in that space. But as we speak, we will be opening 6 showrooms in international regions, and we will also be entering the US in this financial year. That should come in or before the H1 of this financial year.
And that will be via Kalyan, or also along with it, Candere will also be entering?
US, outside India, we have not tried out Candere at all.
Okay.
So we are waiting for Candere to settle down in India and then think on outside India.
Okay, so this is the first time that you will be foraying in the US market.
Correct.
So this is, and then you will be looking at expanding within US before going, in other parts of the geographies or rest of the world?
The US will be the first focus outside Middle East because we are trying out the first showroom in US this year, and once that settles down, US will be the focus post Middle East. There are, of course, inquiries from other parts of the world like Singapore, Canada, UK, Australia, but our primary focus will be the US since the first showroom work has already started, and we will be focusing in that region.
All right, sir. Well, thank you so much for speaking to us on Business Today, sir, and sharing all these insights from this quarterly earnings. All the best to you for the upcoming quarter as well. And here's hoping for more conversations to follow to give us a better idea as to what is the company's vision for growth going forward among the industry trends. Many thanks.
Thank you. Thank you.
All right, with that, viewers, we wrap up this very special conversation with Kalyan Jewellers, and I hope that gave you a lot of insight as to what has really gone into this quarterly earnings and what is the growth outlook going forward from here. But do stay tuned on to Business Today as we continue to get you such exciting conversations from the top managements of the companies that are reporting their numbers of Q4.
Increasing manufacturing is not that easy, given the kind of mistakes that were made in the past, or the lack of progress, I would say, in the past. I'll give you an example.